Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We invest in fighter pilot precision on a daily basis. Today, we're going to talk about some of that fighter pilot stuff, and that's called defense stocks. One of the two companies out there that I really like that we're going to talk about today are Lockheed Martin. Again, a maker of all kinds of aerospace and defense types of equipment. And then Raytheon, which is also a maker of equipment, but they also make some of the expendables, such as missiles and things that you either use and have to buy more of, or they have a shelf life to where if you don't use them, they eventually expire their shelf life and you have to buy more. Thinking missiles, things like that. So that's what we're going to talk about in defense stocks. Yesterday there was a huge sell-off. It was the worst market day since May, which always sounds kind of bad, but as far as a headline, but really the worst day since May. Like, who cares? But it was a big sell-off, got a lot of people excited, but it also got a lot of people thinking it's a buying opportunity. Today's futures have bounced back and recovered about half of that. I think that's a bit optimistic. I really do. Just like I said yesterday, I think there's more things to be concerned about. So I did not hop in and buy a bunch of stuff yesterday. I bought a little bit of a few targeted things, but really not really looking to hop in and buy a whole lot today either, other than making some adjustments, taking some risk off, and transitioning into some fixed income stuff, which is kind of new to me. Blackstone holding that's out there for accounts that are decent size. It's the right move. So I don't expect this to be a rip your face off Tuesday, up 2% or anything like that. But we did recover some of the losses yesterday. All right, our question today is, what can you spend 529 money on? Again, 529 money is the money that's dedicated for education. The rules keep changing, which is nice because the rules are getting more or loose, opening up, if you will, on the things you can spend money on. You still can't really buy a smartphone for your kid with the money, but you can buy them their computer. So there's some fine lines out there, and we can talk about those once we get to that portion of the show. All right, as far as the longs and shorts, longs, we're looking at Uber. Uber CEO was just on CNBC this morning talking a big game of how you want, they partnered with Dress for Success, which is they're starting to get into some more career type things where, you show up in an Uber, you get your clothes brought to you by an Uber, like Uber Eats, except for this is like Uber clothes, right? So, and you get dressed up, you hop in an Uber, you go to your job interview and slay, because you're able to practice your job interview all the whole time you're going there, versus having to drive yourself, figure out where to park, and all the things that take your brain away from practicing for setting yourself up for success. So interesting. They're up 5% on that kind of news. They also just want to be a one-stop shop for everything. So, it's interesting. I like Didi. Didi in China, one of their two founders stepped down last night because they think that this particular founder thinks that the Chinese government's actually going to take over Didi. That would be, I don't know how that would affect the stock exactly, if that's going to be the case, but big deal when one of the founders steps down. I looked at the stock this morning, it wasn't getting hit too bad. So maybe it's not a big deal. But we have Uber long, we have BIOC on a cancer advance that they announced. And for short, we only have the one since the market's up so much, but that's CFMS, which is Conformis, and they lowered the revenue outlook for the first time. So, and also Uber is forecasting to be profitable for the first time. So that's why they're up big this morning. I think that'll be a clear long today. All right. So that's what we have for our show today. If you're catching us on replay, make sure you subscribe and hit the notifications bell. If you want to join us live, it's $25 to come in the room. And with that, let's go ahead and get started. All right, here's our lineup card for today, Tuesday, September 21st already. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for how to combine anything you hear in this presentation. Full disclaimer is available to OTOTnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. Again, we're talking about defense stocks today, something near and dear to my heart. So when you think defense stocks, think large contracts, multi-year contracts, think expensive equipment that the military needs, obviously, to do their business. You also, a lot of the innovation out there comes out of the military. So it's a lot of cutting edge technology that comes out of the defense stocks into the military and then goes mainstream from microwaves to the internet from back in the day, so that's where a lot of innovation takes place. These stocks are not cheap from a price point because they generally don't split. But like Lockheed Martin, and we're going to talk about, it's up over $300 a share. But when you look at it from a PE evaluation, you're going to see it's actually pretty cheap. And that's fine. It was Raytheon, but they've kind of switched with their price action. So I like Lockheed Martin a little better right now. So those are the ones we'll talk about. If you want to use a defense fund, ITA is probably the best out there. There's several. ITA is one I use with clients that would prefer to be in an index fund. Then we'll talk about what you can spend 25 to 9 money on. Flow for today, long, short, open, short, long. We'll take a look at the around the world. Everything is in the green after everything was in the red yesterday. Then we'll come back to our own headlines and see what we're talking about in today's headlines, but primarily it's the Federal Reserve meeting, which kicks off today. Again, the announcement will be at 2 p.m. Eastern tomorrow. I don't expect any surprises, but everybody tries to make the point of, well, there could be. It's like, well, yeah, there could be. A lot of things could happen, but it's just not likely to happen. I don't think we'll see anything of significance, but I do think the market will be kind of suppressed until that point. So all of these gains we had this morning, maybe they hold, maybe they don't, but I would certainly think that odds would be that we would end up lower today than where we are right now. All right, we'll execute the open and trade worked yesterday. I'll post that this morning, but the short in the automotive was fantastic. And contingencies and academic resources are standard. All right, let's take a look at TD Ameritrade Think Pipes real quick. Here's our 4 trade setup. You have the S&P. You see how it's kind of leaking down here? That's why I'm saying this is, there's all this optimism when the market opened because of the around the world action, right? But then pretty much negativity has taken over since then, trending down into the open, which makes me think that we'll see some selling off at the market open. Where are we overall? We are here. If you look at the channels, we have like 15 channels that are AI generated on this chart. They're all up, every single one of them. However, our data point yesterday did knock us out the bottom of pretty much every channel that's out there except for this one. So we'll see. If we bounce back up in the green, get back in these channels, no big deal. If we would do a massive reverse today and continue to fall, then that would start to break some of these strings out here, which, once you fall out of a channel, things tend to sell off pretty hard. That's really for individual stocks, but it can happen for the market as well. You zoom in onto the 5-day, and you can kind of see here's the big move was the gap down overnight. And then the market kind of head faked higher yesterday and then sold off, but you saw a lot of positivity going into the close. So made us think the world was not over. And then we just talked about this move here. So we'll be back to TD Ameritrade for our day trading stuff here in just a second. Let's take a look at the headlines and returns around the world. I'll refresh these real quick so you can see over 0.5%, almost 0.5% for the S&P and the NASDAQ, over 0.5% for the Dow. Over in Europe, everything in the green, over 1%. Asia, you have Japan down. Everything else is up there. Bonds holding steady around 1.3. Oil around 70. Gold and silver up just slightly. And then crypto bounced yesterday and then sold back off. So this is where if you're looking to get in on crypto because you think you've missed it, consider, I use MSTR MicroStrategy for my Bitcoin proxy and then ETHE for the Ethereum. And again, people were calling, Ethereum 5,000 not too long ago. Well, it's back at 3,000. But I do think both these go higher from here. Okay, let's take a look at what's going on. Again, the big market sell-off yesterday was caused by Evergrande and their announcement that they were 300 mil in debt, which is a lot, and that they're basically going under. Chinese government did hop in and say they're too big to fail, if you will, because of all the aftershocks, the reverberations that actually not only within China but outside of China. That's what spooked everybody yesterday, right? Is a huge company biting the dust. So that's why you see some of the calm returning to the market of China said it would take care of its problem. That'd be kind of nice. We'll see if that actually happens. All right, Big Lots is selling off this morning on a downgrade. Some COVID booster news out of J&J that was exciting. There's Uber shares jumping 6%. You know, the debt limit discussions going on. I don't think it's going to move markets, but, you know, it does keep bringing up the question of how does this all end? And I don't think anybody knows that answer. I'd be scared if somebody said they do know the answer. I'd stay away from those folks. We don't know how this is going to end. All this spending, is it going to be inflation? Is it going to be hyperinflation? Is it going to be deflation? You know, there's a bunch of different opinions out there. Okay. All right. Let's take a look at the defense stocks real quick. All right. Here's Raytheon. This has been my top pick. When you look at things, you know, you got 2.4% dividend. Forward P is around 16, current P is a little bit higher, but you see their earnings increasing significantly. They're 7% off their all-time highs. And, you know, when you look at the chart, pretty good entry point here in the mid 80s. So I like Raytheon, but what I like better is the entry into Lockheed Martin, which is LMT. So when I'm adding defense stocks today to some folks, because I am rebalancing several things, more rebalancing, but look at the sell-off that you've had here. It was up at what, 395, you're down at 338. The chart looks worse than it is. That's, you know, 15%, but you get a little bit more of a dividend. You get 3% dividend with Lockheed Martin. And look at these PE ratios, 13 and 12. So pretty impressive as far as how cheap this is at the current price. And you go, okay, well, where was it at this price last time? Well, there's a bunch of congestion here, but once it went higher, it ripped basically a straight line from 330 to 390 in that move there. So I do see that repeating. I think now politically is a time to consider getting in defense stocks, right? So anyhow, consider Lockheed Martin. I like it the best of the breed out there. And then ITA real quick before we switch to the market open, you can do the same thing with ITA, except you get all the defense stocks. So whatever your particular investment strategy is, execute your game plan. All right, I'll be back in a second to set up for the market open. Good morning, everyone. We have 15 seconds to the market open on Tuesday, September 21st. You can see the futures here on the left. They did gap up. This is the S&P 500 1-minute chart over here on the left. And you've been selling off a little bit into the open. We have two longs. There's the opening bell. We have two longs in Uber and BioC, and then Conformis is our short. I don't like this short very much, but I do like the Uber long. The question will be how to get in quickly on this, and this doesn't help if it just runs up right here, which means we aren't going to be in it. We did have a successful trade in Lee Automotive yesterday. It took all day for it to get there, but eventually it busted down through the 3-hour point. Okay, we're looking at this low of the day at 42.20, so 42.60 would be our entry point. I can't enter here. I just can't. We need some profit taking to be able to get into this name. We can keep an eye on BioC though. They're selling all, well, I don't like any of these. And unfortunately, there wasn't many that most everything was moving up this morning, that 2 to 3%. You can watch the overall market here and kind of get a market selling off a little bit at the open, kind of called that with some of the negativity that's out there. Still holding easily in the green, you know, 0.3 or so. All right, I'm not going into Uber here because it moved up too much. Don't like BioC and or Conformis. Doesn't even look like Conformis is open. It is open, but hardly any. Okay, I guess 100,000 shares. Thesis there was they lowered their revenue outlook, but that'd be tough to hop in here. If you're dying to trade and you must, you don't ever must. But if you're dying to and you can't help yourself, 166, your entry point would be 164 if it reverses. Now that changed. So 167 would be your high of the day. So 165. So you're going to have to use a 2-cent stop. So if you enter here at 165 to the downside, it'd be 163, 161, and you're out at 159. So that is like a super aggressive trade. It would have to, if it touches 167, you're out. But I'm not calling that. I'm not going to take credit for it. But if you're dying to trade, that would be your trade. All right, let's just bail on that and look at how the Overall market's doing, got Clickstream up 12% over looking off the left-hand side. Sony, AMC, Cybin, Trade Desk, some tech names here, Palantir, BX, Espo, Esports. We haven't talked about esports in a while. Didi, all right, in the green after one of their founders steps down out of concern over the future of the company. That's interesting. Disney in the green, K-Web in the green, shocker. Means Baba's probably in the green here somewhere, or maybe not, since it like never is. But all right, names in the red. We have what, 10, 12, 13? And they're all pretty small names. Zoom's not a small name. It's in the red. DraftKings. I've started to rotate out of DraftKings. I think all the money's been made. Not all. I think the large proportion of the money has been made, meaning it may go higher, but we've already made like 400% in the trade. So I think it's time to move on. And sure enough, called it. So Alibaba is in the red when everything else on the planet is in the green. So for those that hate on Alibaba, you get to be right yet another day, which means you've only been right like 6 months in a row. So I'll be right eventually, but we'll see when Baba turns. All right, let's look at, let's come back on camera here and look at the 529 rules. Okay, so what can you pay? So say you've done a good job of saving and investing for college, and then what can you spend the money on? Well, the first thing is the basic, obviously, tuition and fees up to the full college amount of tuition. So that is a published number. If you get a scholarship, you can back out, the money that you saved without penalty. You do have to pay taxes on the gains as if you never did it. But basically, tuition and fees are kind of the no-brainer, right? If you're in private school, check this out. If you are in, let's get the right screen up here. There we go. Now you can see the chart that I'm looking at. Highlighted there, $10,000 a year for kindergarten through 12 if you are in a private school. So you can take that money and apply that again per year for private school. Books and supplies, that's for college. Computers and internets, that's only college. So don't try to deck out your house with stuff because your kids are in private school. You can't do that. Room and board, as long as they're half, at least a half-time student and in college, you can do that. Special needs equipment for college only. Travel and transportation, generally no. So don't try to speed there. Health insurance, no. Application and testing, no. Extracurricular, of course, no. And then student loans, lifetime limit of 10,000. So when you talk strategies, it's like if you have any doubt whether your child is going to complete college on their own, maybe motivation, you can have them pay for the first semester. Put that on a student loan in their name. And then basically, as long as they successfully complete the first semester, you could, as a strategy, just say, okay, fine, thank you. Continue on, that you'll pay for the rest of it. And then once they graduate, then you can go back and take the remaining 529 money, assuming you have some left, which you will if you've done a fantastic job of saving for it. You can go back and cover that 10,000 or whatever the first semester costs, 10,000 out of here and then the rest out of pocket. So anyhow, interesting strategy. I kind of like. We'll see if I execute that or not. All right. That's all I've got for today. Thank you so much. Let's check back on the markets real quick. Okay, market's hanging out at that 0.5% up. So far, so good as far as holding on to where we are. I'm not taking credit for the trade here in this short, but if you did take this trade short, it did work. So it held 167 and you're back out at 160, 159, pretty easy. So 4 our trade on this short here in CFMS conformist. All right, so I've got for today. We'll catch you guys back tomorrow morning.